Ugly D word called divorce.
You 100% need to get a separation agreement done.
How did they get their name off that auto mortgage?
You actually have to do a refinance.
Marital split affect people's credit bureaus?
Marital split has nothing to do with it.
Would selling make more sense?
The other person has to consent no matter what.
Welcome to the Mortgage Den. It's Nick Da Silva again, principal broker here at Northwood Mortgage. And with me, Scott Robson. Hey,
Thanks
Scott.
for having me again.
Scott, today we're going to talk about mortgages and unfortunately that ugly D word called divorce. So let's get right into it. When married couples buy a property, whose name go on title?
When married couples buy a property, usually both people go on title.
Can one name go on title by themselves?
Yes, one name can go on title. The other person go on as a guarantor or can have nothing to do with the property as well.
Now, if one person is buying the property of a married couple, what is the obligation of the other spouse who is not on title?
So the other spouse that's not on title really doesn't have any responsibilities. But if the property does go into default and there is a guarantor, then they're going to be responsible for that property as well.
Do they have to agree to the mortgage?
Both people have to consent to anything that's done with a matrimonial property.
Whether they're on title or not.
Correct.
So now we have them set up on title. And unfortunately, here's some ugly stats. 40% of marriages end up in divorce. And 67% of second mortgages also end up in divorce. And you have another stat on third mortgages.
I think if they get married like 3 times, the divorce rate's like 85%.
So unfortunately, this is a very common situation that we see in our environment. Couples go and they unfortunately split up. What should they be doing once they decide that they're going to separate?
So if a couple decides that they're going to separate and there's any assets, any property that's involved, you 100% need to get a separation agreement done.
So what exactly in a separation agreement are lenders looking for?
So the lenders are looking for a couple things in the separation agreement. The first off is whether or not there's going to be any alimony. Secondly is whether or not there's going to be any child support. And thirdly, it's going to be the division of the assets. And the reason why the lender's looking for those specific things is because for qualifying for a mortgage, if there's alimony or child support, the lender is going to have to include that in their debt service ratios.
If a couple that's married by common law split and only one name is on title, does the other spouse have any rights to the property?
If it's a common law relationship, the person that's splitting that is not on title for the property has no interest in the property whatsoever, and they're not entitled to the assets.
So now we've set everything up. Either spouse now wants to move forward in buying another house. What do they need to do?
So if the new spouse is going to buy another place, they're going to have to make sure they had that separation agreement in hand, make sure it's stamped and done by a lawyer, because any lender is going to want to see it when you're trying to purchase another property.
Does their name need to come off the other mortgage?
If they're going to stay on that other property, which most divorces, they're going to leave the property anyway, their name has to come off the other property if it's written in the separation agreement.
How did they get their name off that other mortgage?
In order to get their name off the other property, you actually have to do a refinance because the lender still has that person's interest on the property.
So they have an obligation. They have their covenant still on the mortgage. So what you're saying is basically that they would have to remove that covenant from the mortgage, and that would have to be done by the mortgage being paid out and refinanced by the spouse who's keeping the property.
Correct. So if the spouse is going to keep the property, the good part is we have lenders that will allow you to take the equity out up to 95% of the property value.
So what you're saying is, as a spouse, they can get an insured mortgage up to 95%, buy out the other spouse, and take possession of the property strictly in their names.
Correct.
How do they determine the value for the buyout?
So determining the value, usually lawyers or anybody who's involved in it will tell you to tend to get 3 appraisals done. If you don't get 3 appraisals done, each party has to get an appraisal done to see roughly where the value is. And that's a very big part. Make sure you get an appraisal done.
And that'll determine the value that they're going to be basing their buyout on.
Correct.
Does a marital split affect people's credit bureaus?
When it comes to the credit, marital split has nothing to do with it.
So is there any way in a marital split, the function of the marital split can cause issues with someone's credit report?
The hiccup, if you're getting a marital split and there's like you're splitting assets taking longer than it's supposed to be, you still have to keep all of your credit, all of your debts, all of that stuff in good standing, because if it falls in arrears, it will negatively impact you.
Now, we've discussed, one spouse buying out another spouse, moving on, refinancing. When would selling make more sense rather than trying to buy each other out?
The hard truth of it is sometimes divorces don't end the best possible way. So when that happens, if you can't come to an agreement, you have to sell the property.
What other reasons would there be to sell the property?
So another reason could be is if there's not enough equity to actually split it to be beneficial for both parties.
Proceeds are normally split how?
50-50.
Is it always split 50-50?
No, it's not always split 50-50. So in the separation agreement, you'll outline if there's any debts or anything along those lines that have to be paid out. So the spouse might end up with less than the other.
We've had a few people write into us regarding this topic. And one of them is asking, can I remove my estranged spouse from a mortgage when I'm refinancing?
So when you're refinancing, if there's two people that are on title for the property, the other person has to consent no matter what. But that being said, if it's still a matrimonial home and you're married and that other person isn't on title, you still have to have their consent and their permission to do anything to the property.
The couple are splitting up, right? How do you get the spouse off of that mortgage?
So the only way to remove the spouse's name off the mortgage is one, if you go back to the existing lender and they allow for the spouse to come off, which I haven't seen been done as of late. I'm sure it's been done in the past, but I haven't seen it. And the other way is if the spouse does a refinance and takes the person off title.
So refinance qualifies for the mortgage strictly in their name, and this way the other spouse's covenant is released.
Correct.
How does child support affect a mortgage approval?
So the child support is very big when it comes to mortgage approval because it's considered a debt. So when we're doing our calculations to see how much the client can actually afford, you have to have that number in under their liabilities, and every lender is going to catch it. You can't get around it.
So it's part of the income qualification process.
Correct.
Scott, how do I remove my spouse's name off title of the property? Can I remove them without affecting the mortgage?
You can't remove them off title.
Well, we can, but is it legally able to do it? Should they be doing it?
Yeah, you can legally take a spouse off title of the property, but they're still going to be responsible for the mortgage.
Because their name is still on the mortgage.
Correct.
So for them to take their name off title, they more than likely would want their name off the mortgage.
Correct.
Which would basically mean from our conversation here is that the person keeping the property would then have to refinance to remove that mortgage and to have that person's name released.
Correct.
So Scott, a person is deciding to split with their spouse, obviously going to need a place to live. What should the first thing they do when they're thinking about doing something like this?
If you're thinking about splitting with your spouse, make sure you contact a mortgage broker, get all your ducks in a line, have your separation agreement, your income documents, everything all put together in order to qualify.
In this way, they know what they will qualify for when they have to go and find a new place to live.
Correct, because there's no sense in going out and thinking you can afford a property when it's not going to happen.
Scott, thank you for coming today to discuss divorce and mortgages. It's a topic that, like I say, unfortunately, it's more prevalent in our society. And, here we've given them some information for those people who are contemplating splitting with their spouses, a way to find a new place to live. So again, thank you for joining me here today.
Thanks for having me.
Thanks again, Scott, and thanks to my audience out there for following The Mortgage Den. It's been a great privilege to bring you this topic and look forward to other topics coming down the road very shortly.